Time now for our 360 round. For that, I want to bring in our panel to discuss CoreWeave's latest quarterly report. Joining us now, we've got Lisa Martin, Research Director at Futurum, and Stephanie Walter, Analyst in Residence at Hyperframe Research. It is good to be with the both of you. Love the pink, by the way. On Wednesdays, we were pink. Let's start out with you, Lisa. I want to get your reaction to this market reaction that we're having in the quarterly report. Shares are nosediving today. That loss wider than expected. Revenue did beat expectations and triple. Does this market reaction make sense, or is this overblown?
Absolutely overblown. You know, what we see, this is CoreWeave's second quarter of full financial results as a public company. The IPO less than 5 months ago back in March. Some of the highlights, though, from a news perspective, the Q2 revenue was up. It was 1.21 billion versus expected, which was 1.08. You mentioned revenue more than tripled from over a year ago. There is contracted backlog of over 30 billion, revenue guidance exceeding consensus for the current quarter, for the full year. We did see shares slide yesterday, as you talked about, but I think some of the key trends that we need to lean into is that revenue growth is capacity constrained. Demand is exceeding supply, and we know that. And CoreWeave, from the top management down, is being very transparent about that. They're also being very transparent about power supply for data centers. That remains a bottleneck, and the company is addressing that. But if we look forward, as they said, something I see promising, CoreWeave now sees 5.15 billion to 5.35 billion in revenue for all of 2025. That suggests a big growth rate, and that's up from the forecast that management gave a few months ago back in May.
Stephanie, I want to ask you this. You say the hardware first approach is not enough for enterprises. What do you mean by that?
So what I mean is that CoreWeave will struggle to attract and retain larger, more traditional enterprise clients who are looking for a partner to help them navigate the complexities of AI adoption, not just a hardware vendor. We are seeing some moves with CoreWeave, like the recent acquisition of Weights and Biases, which provides machine learning development tooling. And they're attempting to build a more comprehensive AI cloud platform, but AI is more than just hardware. So the lack of current comprehensive AI services beyond the GPU itself leaves the company exposed to competition from a more established full-service provider. So, can CoreWeave convince AI developers to choose them over the larger, more generalized hyperscalers? I think that's going to be tough.
Lisa, let me ask you this. Speaking of these big name heavy hitters they have in terms of their client base, they've got big names like OpenAI, like Microsoft. Is that a strength for them, or is that a weakness for CoreWeave?
I look at it as a strength. I think some folks see it as a weakness that there's a lot of concentration in the customer base. It does primarily contain large enterprise companies, AI companies that require significant compute power, especially for AI workloads. We're talking Microsoft, IBM, OpenAI, Meta, along with some startups. Now, one thing to point out was that in 2024, CoreWeave's largest customer was Microsoft. That accounted for 62% of total revenue. But they've been focusing on actively expanding their customer base beyond these initial anchor partners. So I think customer concentration is an issue. Diversification will be key, but I do see the partnerships with Nvidia, with OpenAI as a strength for them. They're very symbiotic relationships, and we're seeing headway made in the direction of diversification in the customer base.
Stephanie, their margins came down in this most recent quarter. Part of that has to do with some stock-based compensation. And then they're also spending big in general, so we can see that hit to profit there with them reporting that heavier loss than expected. So sometimes in a growing industry or when you're in this nascent place, that there's forgiveness for that. Why doesn't that forgiveness exist for CoreWeave right now, Stephanie?
I think a couple of reasons. I do think the hardware first approach and competing with the hyperscalers sort of has the market a little bit nervous. Also, their key technology is really based on the development and deployment of a highly optimized capital-intensive infrastructure. And the conversation around the company isn't just about revenue growth, but the economics of building and operating the specialized infrastructure at scale. And the key question for the future is when can the scale of their operations translate their high gross margins into sustained profitability? So, they've made a lot of money, with record revenue and massive backlog, but the market is still extremely sensitive to this margin pressure and rising debt.
So, Lisa, what should investors do? I know you're prepared for this one. Should they buy it? Should they hold it? Should they sell it?
It's a challenging question. I agree with a lot of what Stephanie is saying. There are a lot of challenges there. I do like the transparency. I always appreciate a company that is very transparent with its user base, its partners, its sponsors. Now, whether to buy CoreWeave, that's a pretty complex decision. There's potential upsides, there's risks, making it, I think, suitable for risk-tolerant investors who understand a couple of things. The high growth, high volatility nature of CoreWeave. We've seen that volatility in the stock since it went public. It's experiencing this rapid revenue growth, but the GPU-focused cloud services are in high demand, especially from the big players like the OpenAIs and the Microsoft. So there's potential for future profitability despite current losses. But let's be clear, it is a high risk at this point. It's a relatively new company. It's got a high cash burn rate. It's got a reliance on debt financing. So the stock is known for that volatility that I mentioned. And it's operating in a market that's highly competitive, though they do position themselves as the AI hyperscaler. So I think with caution, proceed.
All right, with caution, proceed. Love our ladies panel today. Women on the wavelength, we'll dub it. That's Lisa Martin from Futurum and Stephanie Walter from Hyperframe. Thank you both.